It ain't my fault.
So the Fed raised rates 1/4 of a point, but why didn't mortgage rates increase? That's a great question. And first things first, the Fed raised the federal funds rate 1/4 of a point. Key word being the federal funds rate, not mortgage rates. The Fed fund rates being increased affects short-term rates like car loans and credit cards and the prime rate, but not your FHA or VA or conventional 30-year mortgage rate. Matter of fact, the day that the Fed raised the fund rates 1/4 point, long-term mortgage rates improved slightly. So the media and other ill-informed sources will tell you that mortgage rates went from, say, 4% to 4.25% because the Fed raised rates 1/4 point. Not true. Actually, on that day, rates improved slightly for an entirely different reason. Again, not much, but they did improve. Key point is they didn't increase 1/4 of a point, like the media said. For example, mortgage rates didn't really move a whole lot on that day, as I said, but if you were paying, say, a point to obtain a 4% mortgage, now it costs, say, only 1/2 point. So rates didn't go up as the media said, and they didn't really improve a whole lot, but the cost of obtaining that rate improved. I hope that makes sense. Key point is, mortgage rates didn't increase because the Fed doesn't control mortgage rates, just the Fed funds rate. So who does control mortgage rates, Ryan? Great question. It's a common belief that the Federal Reserve makes consumer mortgage rates. It doesn't. The Fed doesn't make mortgage rates. Mortgage rates are controlled by mortgage-backed securities, which are controlled by, oddly enough, you and I and Wall Street and other investors, basically people investing into mortgage-backed securities. But the Federal Reserve has no direct connection to the US mortgage rates whatsoever. Indirect, yes, but not direct. Now, what does that mean, Ryan? Well, the Fed does exert an influence on today's mortgage rates, and after its scheduled meetings, the Fed committee issues a press release to the public which highlights the group's economic opinions and consensus. When the Fed committee's post-meeting release is positive on the US economy, mortgage rates tend to rise. Conversely, when the Fed is generally negative with its outlook, mortgage rates tend to fall. Lately, the Fed has shown a mix of positive and negative. But here's where it gets really strange if I haven't lost you already. We now know the Fed raising the federal funds rate doesn't affect mortgage rates, right? But I did say the Fed indirectly affects mortgage rates, and we kind of know why now as well, right? With their positive and negative comments. So what happened last week that helped mortgage rates? Well, oddly enough, the devil's in the details. Janet Yellen was talking post the rate hike and talking about the economy. Now, the mortgage-backed security market was waiting to hear her address the Fed's future policy in regarding to buying mortgage-backed securities. Yes, the Fed actually does buy billions of dollars worth of mortgage-backed securities. It's honestly the only reason why rates have stayed low, and we've covered this as well in previous shows. What the market wanted to know is the Fed going to continue to buy mortgage-backed securities, in effect keeping downward pressure on mortgage rates? If Yellen said no, rates would have increased, and could have actually increased more than 1/4 point. If they hinted at continuing to buy mortgage-backed securities, then rates would have improved. So in the end, she really didn't tip her hand either way, so the mortgage-backed security market improved slightly. Isn't that crazy? Our mortgage rates had nothing to do with the actual rate hike. It was all in Janet Yellen's comments afterwards. Pretty interesting, huh? This is a super complex topic, and I hope that makes sense to realtors, lenders, and consumers. I mean, we just touched on it a little bit. We'll try to answer any questions that you guys have down below in the chat log, but share this knowledge with someone who is ill-informed and help them be in the know, and we'll see you guys next week.
It ain't my fault.